PACE webinar. Hope everybody's having a great trading session. Happy Monday to you. Happy Friday to you. Did I just say happy Monday? I did. Happy Monday. I meant happy Friday. Oh, thank God it's Friday. Really, it's the last day of summer as we know it. Because next summer it's going to be 135 degrees here in Phoenix. I'm sure of it. I'm just kidding. It's been a hot, long summer. How's it been for you guys where you live? You know, I always, I'm a little sensitive to climate change. You know, it's so funny. Like, it's so funny. You know, when you have people that like, you know, don't talk much about climate change. Maybe you're in a place that there's not, you don't feel it as much. But being in Phoenix, Arizona, I've witnessed the heat continuously increase over the years of my life being here, and I think a lot of it has to do with just living in a concrete jungle, or more of a concrete jungle. I think concrete retains more of its heat, but I've definitely seen and felt the weather change here over the years, and how you know, summers are getting longer and hotter. And since, you know, as time goes on, anyway, I don't know how you guys feel about climate change, but man, I'll tell you, it by the time I'm 60, so we're probably going to reach, you know, 130 degrees for highs here in Phoenix. But that would be my assumption here within the next few years, which is going to be ridiculous. Because this summer we hit, you know, I think we hit 122, maybe 23, somewhere around there. It's hot. I don't know what it's like for you guys. And speaking of climate change, it's like we get more like this monsoon season this summer has been more humid, and we've had more storms than normal, which is, you know, odd. It's like, well, you know, what's hard is when we're not used to getting a lot of rain, and we get dumped on for like a month. You know what happens to me? I spend a month fighting the weeds, like literally fighting the weeds in my yard. And I've got a big yard, and it's you know, I have to, between myself and the guy that does our yard, it's like a never-ending battle. Anyway, that's neither here nor there. Let's talk about a couple of things. First and foremost, for all of you guys that have written in your suggestions for Paulie's new webinar starting Tuesday, which, by the way, will be unnamed going into Tuesday, I'm sure. We haven't formally picked a name, and I'm assuming we're going to pick a name probably within the next week. Doesn't have to. We don't necessarily have to have a webinar name for Paul Franco as soon as he kicks off on Tuesday. But for all of you guys and gals that have sorry, it's Friday, you have to excuse me. For all of you guys and gals that have submitted your names to my email address, let me give you my email address. I just want to say thank you. So let me go to the chat box. My email is bmorrow@forexanalytix.com. It's my first initial last name. So you guys can email me if you have any other ideas, or if you, I have to admit, Patty, if you're listening in, man, she threw out like 12 different names for something. She had her list was very long and extensive. It was awesome. Andrew just said Banco de Franco. That's a good one. Banco de Franco. I like that one. That's pretty good. Andrew, you're a clever guy. I was just actually, I was Andrew is in our chat room. He's AG33, and I put out a picture of him and I. He came in from Chicago for a spring training game for Arizona Diamondbacks game, and he invited me to go, and I accepted, and I met him out there because it's just, you know, a couple miles away from where I live, and met him and one of his buddies out there for a couple of beers and to watch a game. It was fun. I showed a picture in the chat room of him and I, just so everybody had an idea of, you know, it's nice to know what people look like. Anyway, Banco de Franco, I like it. All right, so let's talk. I guess we should really talk about the markets, right? It's Friday. I don't really feel like it. I really don't. I feel like taking the day off, but I'm not going to take the day off. I'm going to hang out with you guys. You know what I am going to see a little bit later today? I'm going to see the Meg. I'm going to see the Meg. Have any of you guys seen that movie, The Meg? I'm taking my 11-year-old son and his best friend. They want to go, and my wife. My older son, my 14-year-old, doesn't even want to see it, so we're going without him. But we're going to go see the Meg today. Yeah, it looks, you know, I mean, it's obviously cheesy. It's no Jaws. Jaws is I saw Jaws in a drive-in theater when I was a kid. That's when I saw Jaws. There's a drive-in theater. Yeah.
The Meg, is it with the guy who looks really like me, right? Jason Statham?
You look nothing like Jason Statham. Hey, did you know he was just because you're bald?
He was a diver. He was a diving champion. Yeah.
He was a diver. Yeah, I actually found that out recently. He's a badass. He's fun to watch. He's actually quite exciting, unlike yourself. But
you are right, though. We don't look that much alike. I'm much fitter than him, you know.
Yes, you are. Yes, that's like me saying I look like Keanu Reeves, which I don't.
Oh, you do.
Anyway, okay. Well, and yes, that is the guy that looks like you, Stelios. All right, so let's talk about the markets here, and I'm gonna get our bias chart done this morning before we have some Canadian data. If you guys didn't just see the news in the Canadian, we have inflation data coming out in a little bit, the RMPI and IPPI, but the Canadian actually ripped higher due to now this is the chatter all night that Canada wasn't going to be able to put together, or they weren't going to agree to a NAFTA deal that was supposed to be done today. And it's confirmed, or at least from what we see, that that they're not going to come to an agreement. They probably will. So you see my chart here. I'm looking for a move back. You know, I've been very, very adamant about trading this channel, and I was buying the U.S. dollar Canadian earlier this week down at 129. I didn't hang on to it because I've been a little hesitant to hang on to my positions longer than, you know, aside from the cable. Which I'm still bullish, by the way. I just bought more pound this morning. I've been a little hesitant about holding on to the Canadian longer than intraday because of, you know, all the NAFTA headlines that are being released. So, wait, excuse me, my squawk guy is squawking. Excuse me, I got to turn this guy off. Hold on. Okay, I have to mute him. So what I was saying here is the dollar Canadian obviously had a lot of support. This is a multi-year trend line. We talked all about this whole week. Big trend line down here, 129. I picked it up at 129, sold at 129.30. I've been very reluctant to hang around with the dollar Canadian with all the NAFTA headlines rolling around. So obviously I'm a little irritated that I missed this whole move, and aside from scalping it yesterday on the short side for 10 pips when we were live on this webinar, I've been a little, you know, I'm watching it go higher, and I'm a little perturbed that it's going higher. Anyway, we get to 131, and I think you got to look at it as being a short up there. And the reason why I say that is because you guys know that I'm a firm believer that once a NAFTA deal gets done, that's going to free up the Bank of Canada to be hawkish. They've been hesitant about raising rates because of this looming NAFTA deal. So once the deal gets done, I think the Bank of Canada is freed up to become more hawkish. Now, I know that it's got this big trend line, but what I'm thinking here is that we head back up to 131, we reverse up there, and then because you know they're going to put together a deal. So you know, you short it at 131 and then you look for an eventual break below 128.50. But that's the way I'm going to try to trade it. Matter of fact, I need to stick an order out there just in case it makes it. Hold on. Anyway, that's how I'm looking to trade the Canadian, and overall, I'm actually, you know, bearish the U.S. dollar right now. I still think that the euro has a lot of upside. I think the pound has a lot more upside, and I think the dollar yen is going to break eventually 110. Is it going to do that today? No. I mean, I'm just talking generally speaking. So I'd love to see the dollar Canadian make its way up to 131, maybe even the 78% retracement up here at 131.15, and then and then see a bit of a reversal. So for today, okay, you know, like, you know, within the next few hours going into Friday, I do think that we're going to find some resistance up here at 130.66. That's going to be resistance for the so 130.66, 131. Those are going to be resistance levels for the Canadian. Now, if for some reason the dollar, Canada and the U.S. put together a deal today, let's say that the Canadian official is, you know, mistaken, and, you know, a deal gets done for NAFTA, we're going to trade back below 130 today. So you guys know that we're going to come all the way back down here to 129.60. All right. Support today, my assumption is going to be right around here. I'm going to write down support as being 130, but, you know, we could see as low as 129.60, but I'm going to write down 130 as being support for today. Okay, yeah, that's the right number. Okay, let's go into the euro. So if you look at the euro dollar, and by the way, before I go into the dollar, before I go into the euro, let's talk about the dollar index first. So the dollar index is it's still bearish, guys. You know, while we sit below, nothing's changed here. While we sit below 95, you can't be bullish. All right. I mean, you can. I mean, but you gotta realize that the risk is still lower with the dollar. I know we're bouncing around here, but you know that on a 4-hour chart, we have now officially, here, let's give me the drawing thing. We have officially come back to mid range with RSI. Do you know when you go back to mid range, it's like now the dollar is freed up to move lower again. That's all it is. It's just that's all it is. We've completely worked off oversold signals, and now we are ready to resume our downside in the dollar index if it wants to. And while we're below this neckline, there's no reason to be bullish the dollar. Okay, now if we get back above 95, that's a different story. Can we get it back above 95? Of course we can get back above 95. Well, you know, we can get back above 95. You know, we can end up putting back together, you know, China goes back to the table, and the U.S. and China go into direct, you know, trade talks today. Great, the dollar index is probably going to rip, you know, and I say great, but, you know, I'll obviously get stopped out of my cable longs and my euro long too. But I'm just saying that it can happen. It's not like it can't happen. But while we're below 95, there's no reason to be bullish the dollar. We got a
Blake,
big head.
Yeah. Sorry to interrupt. Now carry on. I'll say something after when you're done with the. I was just about to say, look at the monthly charts. Look at the monthly candle basically on the DXY. If I was long that, I'll be very scared.
You know, let's see if I can pull this up on a different, let's go to EOD. That is this is an ICE chart, so let's go over to the monthly. Yeah, it's ugly, huh? It's a gravestone doji.
Yeah, and it's closing today basically, so
yeah, I mean,
that does not look good.
No, it doesn't. That's a great point, Stelios. And I mean, if the dollar closes near its lows, that's going to be ugly. Yeah, I mean, if it
head and shoulders formation on the monthly, perhaps.
You mean like this? Like a complex one? Yeah, I guess. Yeah. I mean, you know, if we're developing the right shoulder here, it's possible. Sure. Absolutely. I mean, you know, the bottom line is, I agree with Stelios. It's an ugly monthly candle. If we close near the lows today on the dollar. Now, one of the other things regarding the dollar is, oops, I need to delete that. Hold on. One of the other things about the dollar, and you know, like earlier, or you know, even right now, the dollar is a little stronger, and Chi was like, oh, any news about the dollar? I'm like, no, I don't think so. I think the dollar just, you know, saw some selling or saw some buying, because a lot of traders end of month were shorting the dollar, hearing that there's going to be this selling demand in the dollar, and I think, you know, you just got positioning a little screwed up overnight. I think a lot of people just kind of, you know, shorted the dollar, and then they're finding themselves on the wrong side of the trade, and they're like, oh, you know, forget it. It's Friday. I'm not going to deal with it. But anyway, yeah, I think while the dollar is below 95, there's no reason to be on the long side. And 94.45 is really key support, since that's the 161% extension. It continues to hold. So 94.45, and that is still bearish. Okay, so let's go over to the euro. So the euro, as you can see here, basically on as I'm drawing it, we have this bull flag pattern still completes here. Inverted head and shoulder pattern completes over here. We have a pennant that's developing. I think that we have to get above 117, you know, for the euro to start, you know, moving again. So 117 is going to be resistance for today, and support is, you know, somewhere down here. Well, actually, the neckline, which comes in at 116.30. 116, actually, yeah, it's 116.30 is support, which we're pretty close to. I think it's still bullish. I know it's, you know, it's always, you know, it's always hard for me to say, oh, it's bullish, but when it's, you know, you see the overnight price action, it's, you know, we've had a nice little sell-off since Asian trade, but that doesn't, just because we had a little sell-off during Asian trade doesn't mean it's bearish. You know, it's hard for me to say it, you know, especially after, you know, you look at it and you're like, wow, it's, you know, it's 40 or 50 pips off of its highs in really tight trading ranges, but it is what it is. I mean, I know, you know, it's come off a little bit, but it's still, while we're above this little dotted line, you know, it's still bullish here. Now, flip side is the Aussie. Aussie looks like crap on a stick. Deep fried crap on a stick. That, you know what deep fried crap on a stick is? That's something you find at a Texas State Fair. Yeah, you go to Texas State Fair and you'll find deep fried crap on a stick, and they'll charge you like $5 for that. It's great. You should try it sometime. No? Huh. Okay, anyway. So let's see here. We have 127% extension for the Aussie on this last move up. Is going to come down at 72 cents. Now that would give us a double bottom here. I don't know how much how excited I would be about trying to play the Aussie on the long side down here. I think the Aussie has all sorts of issues, and you guys know I'm not bullish the Aussie at all whatsoever. But that doesn't mean we can't find any, find some support and finally bounce. So 72 cents is going to be pretty key support here. And we are range bound right now. We drop, oh, dude, I didn't even do the cable. What was I thinking? Anyway, resistance right now is at 72, well, not 72.35. I would say it's this triangle retest, which would be 72.80 roughly. And I'll tell you what, I'm not playing the Aussie on the long side, that's for sure. Okay, here's the pound, sorry. So the pound is coming right into support, and we have a, we're trying to develop a flag. That doesn't mean that the flag is going to, develop here, but I am long the cable. I started buying it this morning. I bought some at 93, I bought some at 81, I think. So, I mean, I own a little bit of cable, just above where we're currently at. I still think it's extremely bullish while we're above a lot of things. Trend line, bullish wedge. Okay, so while we're above this 129.30, I don't think there's any reason to be bearish. And the question is if we're flagging or not. We could easily, in my opinion, we could easily break through this like this and then bounce. Kind of stop out everybody that got long. Like, you have people like me that are trying to play this flag, but their stops aren't going to be as lenient as mine are. They're going to try to play the flag, and they'll end up getting stopped out right here, and then it'll drop below 50, trip another few stops, and then there's going to be buyers that are all going to be sitting down here at the wedge breakout point. So we could make it all the way down to 129.30. I mean, we really could. Okay, but I do still think it's bullish, and if we're playing this like 4-hour flag, and this plays out, then you're talking a move to 131.60, which originally I was targeting the 618 retracement here at 131, but that could eventually move higher as well. So go cable. It's bouncing right now. Resistance will be the overnight highs, which will be 130.28. So I'll write down actually 130.25. That's the resistance, 130.25. That's because that's going to be your flag resistance. Kiwi, what big failure at resistance here. 618 retracement. You can see it here. Okay, big resistance at the 618 retracement. Support is, really close. 66.20. Resistance is 67.25. So 66.20, 67.25. We're in a range. Doesn't look healthy, but it's it's a range right now. Swissy just continues to get pummeled. Now we did complete finally. We completed our. This is the wedge. You guys see this here? So just choose pen color blue. How many of you guys have seen Liar Liar? The pen is blue.
Pen is blue. Yes,
pen is blue. I love Liar Liar. It's one of the funniest movies ever. So we the goddamn pen is blue. All right, so we have this wedge completed. Now you'll notice that these long wicks down here. So you can see anybody who's short, it's like, okay, well, I need to start taking it off. Now does that mean that we can't go lower? No, but the wedge has run its course now. So we've had this drawn out like this for all week. You guys have seen it. Now that we're here and RSI stops selling off, I mean, it's divergent. Chances are we start to bounce pretty soon. Now, does that mean that the dollar is going to strengthen across the board? No, but one of the things that you might look to do is maybe look at the Euro Swiss. The Euro Swiss might not be a bad long right here. I'm not buying it, but I'm just saying, for those of you that trade it, 96.50 is support. And I'm going to put an asterisk there because I think it's going to be pretty important support. Excuse me. We're going to find resistance on any move back up to 97.15. Maybe even up to 98 cents. So, I'm sorry, 97.45. Is bearish, but it looks like we can bounce. All right, let's go over to the dollar yen. So here's the dollar yen. The dollar yen just got the absolute, crap slapped out of it. We have the 618 coming up, and you can see this little breakout point for this very, very minor wedge here. So right there. There's a little wedge breakout that comes right back to the 618. So we should get back down here, which is 110.50 and change. Look at the cable go cable. 110.55 should be support, right? That's what that is. Resistance 111.15, and we are range bound, so Martin says, where is your stop, Blake? Wouldn't you like to know? He says, Barnier reiterates we are working on a partnership without precedent. Yes, that's good for the UK. Martin says for the cable. Wouldn't you like to know? It's not proper to ask a woman her weight. It's not proper to ask Blake his position size either. Okay, we have Canadian data coming out. I don't talk about position size because it's really irrelevant to what you're doing. Do you understand that? It's irrelevant. What I trade, I can guarantee you what I trade is much different than what you trade. Unless you trade for a fund as well, you don't trade anything close to what I'm trading. My P&L will swing tens of thousands of dollars in a day, intraday. Yours, you might swing $50 or $300 or maybe $1,000 if you're an independent trader, intraday. My swings are much different. So for me to go, well, I'm trading 5 million cable right now long. You're 5 million cable. Well, if it rips up 100 pips, you make 50 grand. Yes. If it drops 100 pips, I lose 50 grand. Yes. So it's not relevant what I'm trading size-wise. Canadian data. We got 1 minute. Hold on. You know what I'm saying? So what I like to tell people is I'm taking a small position or a little bit larger position here, because that's going to be relevant. If you have a $10,000 account, it's going to be a lot different than what I'm doing. It doesn't make any sense if I go, yeah, I'm trading 2.5 million, long euro dollar right now. or I'm trading a 10 million euro dollar, you'd be like, how's that make, what's that have to do with what I'm doing? You're buying $100,000 worth of euro dollar. It's that the numbers are just, completely different, right? And then stops, and then I know you asked about stops, but it's irrelevant too, because if I go, well, I have a 30 pip stop, and you go, well, you have a $10,000 account, but you're trading 400,000 euro dollar. If I say I have a 40 pip stop, and you get stopped out for 40 pips, and you lose $1,200 on a $10,000 account, you just lost 12% of your account, and you just did something extremely stupid, yet you're still taking the same trade as I am, right? So it's size and position size and stops matter. So I can't tell you exactly where I'm putting my stops. Plus, I'm not licensed to give you buy, sell, hold recommendation either. All right. So you have to think about every time you take a trade, you have to deal with your own stops, because you got to think about what your risk is. If you're risking in any time more than 1% of your position size in any one trade, you're probably taking on too much risk. Some aggressive traders might be taking on 1.5% risk in one trade, but you think about it. You got a $10,000 account, you trade $100,000 in currency. You don't want to risk more than 10 pips in a trade. You risk 10 pips, you're going to lose $100. $100 is 1% of your account. Anyway, did I just miss the data? I did. Sorry, I was in the middle of chit-chat.
It came in a bit strong, and revisions were stronger.
Yeah, okay, got it. All right, and it's not affecting the Canadian anyway, because sorry, I was on a rant, and then I forgot what the hell I was talking about. You can see that strong data is not even affecting the Canadian, because people want to buy the dollar Canadian because they think that deal's not getting done today, so it doesn't matter. Strong inflation data, who cares? I'm going to use that dip to buy the dollar Canadian. But do you guys do you understand what I'm saying, Martin? What I have as a stop is so irrelevant to what you're doing, and same with a position size, right? Because if you have a $10,000 account, or a $500 account, or a $50,000 account, if I tell you, okay, I'm buying the pound here and I've got a 10 pip stop, that could mean for you a 1% risk. It could mean a 10% risk. It could because what's more important is how big of a position size that you're trading versus where your stops are at. So what I like to tell people is, hey, I'm taking a small position here. What is small? It doesn't matter. What's small to you? And I'm going to keep a relatively tight stop. I'm going to take a bigger position with a relatively tight stop. I'm going to take a smaller position with a little bit looser stop. That's relevant based on what you're doing. Because when I'm trading, a couple large of a currency pair, and you're trading 3 mini lots, it's a different. It doesn't matter, it's just going to be so different. So it's all about, I'm taking a bigger position, a smaller position, wider stops, looser stops. All right, that's relevant to what you're doing. Anyway, okay. Let's go to, what the hell was I talking about? Where was I? Dollar peso, or yeah, let's dollar mex. So I don't know how to trade the dollar Mexican peso right now, honestly. And I'm going to tell you, I'm going to just tell you my conflict here. Do I want to buy the dollar Mexican peso because do I want to buy the dollar Mexican peso because a NAFTA deal got done, or do I want to short the dollar Mexican peso because a NAFTA deal got done? Yes. Do I want to be long the dollar Mexican peso because I don't want to be long the peso with the new president from Mexico coming in office? Yes. So I'm conflicted just as much as the rest of the market. So I don't know what the peso is going to do. I honestly don't. I think that the technicals really have to tell the story here versus, you know, because one argument's going to win out, and I don't know what it is. So really, as long as we're, you know, within this 1860 to 1940 level, I don't know what to do. You know, we break above 1940, that's going to tell me that the market would way rather be long dollars and short pesos, because they don't want to be long pesos with AMLO coming in as president. And, you know, if the dollar mex breaks below 1860, then traders are probably going to go with the story that, you know, this new NAFTA deal is actually going to be very positive for Mexico, and with the new president coming in, he's going to make all these radical changes, blah, 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 blah. You know, people are going to fit the narrative around the price action. So that, you know, that's true with anything that happens, right? If something happens in the market, the narrative obviously changes, and then you have all these, you know, quote unquote analysts that say, oh, well, of course, you know, the dollar is going up because of blah, 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 you know. Well, it's nice that you couldn't see the forest behind the trees previous, you know, you had to make up a story or, you know, fit the narrative to the price action. So right now, and that's what's going to happen here. Okay. You're going to the market's going to fit the narrative to the price action when it breaks out. I don't know what's going to happen, honestly. So you guys can have fun trading this one. I don't know what to do with it. So resistance for today. So that's my rant about the peso. Let me get rid of that. So the resistance today is 1920. Support is going to be at 1893, and that's it. 1893. 19. Did I say 1920? 1921 actually, but who's counting? It's 100 pips amongst friends. Okay. US dollar, Swedish krona, and Norwegian krona. So here's nothing to do here, right? 838, 828. Actually, it's 830, but I'll just write down 828 because it's Friday, and I don't care. I'm not trading it. I'm just kidding. That's a really piss poor attitude, wouldn't you say? All right, here's the dollar, Swedish krona, still in the channel. I told you if it broke below this channel, I would really think about shorting it. It hasn't. Oh, dude, what happened to the cable? Who killed the cable? Damn it. Damn it, man. It was just looking so good. And then, it's all right. I'm still long. I'm still long, but I'm about ready to pass it over to Steve and Stelios because I need to get back to the markets here. US dollar, Swedish krona. So what was I saying here? Oh yeah, it has to break below the support before I can get bearish. So that's 909, resistance at 918, 919. So 909, that's pretty key support, 919, and your bias chart is done. Finished. All right, Steve, Stelios, I'm going to pass it over to you guys because I need to get some trading going here. What happened to the euro?
Okay, mate.
Euro's breaking down.
Yep, it is.
What happened with
It is
the
under
euro
pressure
here?
at the moment.
Okay. So yeah, I'm going to pass it over to you guys. So for a couple things, remember we are not broadcasting on Monday.
Yeah.
Yeah, it's because of a holiday. So, and Tuesday morning, you guys make sure you listen in 1 hour earlier. Same link, 1 hour earlier for Paul Franco. He's going to be starting, and he's going to take you through the bias chart just like what we did here. He's going to take you through the bias chart starting next Tuesday morning at 7 a.m. Eastern, which is an hour before this. Just use the same link. Remember, get your names in for what you think that show should be called. We're going to select a name here within the next, I would say within the next week or so. And my email address is in the chat box. You guys have a great long weekend, and make sure you visit Forest Park FX. They are our sponsor for the FACE webinar, and a proud we're a proud partner of them in this endeavor, because they're really great company to work with if you're in search of a new broker, no matter where you live. So make sure you visit Forest Park FX. All right, Steve, Stelios, TGIF, I'm going to pass it over to you guys, and I am ready for my 3-day weekend.
TGIF, mate. Yeah, you deserve some rest for sure.
TGIF. All right. You guys have a great one. Thanks for tuning in, and it's all yours, guys.
You too, mate. Thank you.
Thanks.
Okay, Stelio, here's your favorite pair. Use the knock. Personally, I think we have at least one more leg lower. So I think that, you know, one of the things I want to show was, I think that, oh, let me actually, okay, now you should be able to, yeah, now you should be able to see my screen. So I think that 840, you know, might be a nice level for somebody to sell into and look into. Another push lower towards 820, likely, so like for at least an ABC. So I think this is like an interesting opportunity. Now, on the other hand, you know, I was talking about crude, you know, several days ago. I was saying that, you know, this move higher from the 200 DMA looks good, but you know, a break above 70 is going to require for me like to get 100% convinced. You know, that we've actually found the low. I have to say though that you can even see it from the daily, like it's a 1, 2, 3, 4, 5. So that we seem to have like 5 waves higher. But you know, 70 seems to be creating some resistance now, which makes sense. So you know, I'm waiting to see what kind of a pullback we're going to have. You know, if the pullback looks corrective, I think that you know, I might even be buying into it. So that also, that the reason I talked about crude immediately after the USD knock is because that bodes quite nicely with what I suggest in the USD knock, because if we get some pullback here in
Steve, you're doing that. You've got 10-second lag again, unfortunately. Yeah. We've lost you completely now.
you know, in crude, that should theoretically have.
That was a particularly long pause, like 15-20 seconds. So I think you might want to restart your browser or something. Yeah. And I can take over for a couple of minutes or whatever you want to do.
Yeah, I can start my browser if that proves to be enough, because I'm not sure. But yeah, sure, I'm gonna do this. I actually just did it. And tell me if it happens again, because then I'll just have to restart my computer, and you know, that's not going to be that nice. Anyhow, what I was saying is that you know, a nice pullback from 70, you know, is going to provide like a nice opportunity for the USD NOK to also rebound higher. And you know, then if we get another nice move to the upside and we get a breakout from 70 for crude, I think that's going to give the opportunity to USD NOK to push towards 820. So I do think that USD NOK, you know, at 840 is an appealing, you know, opportunity for a short. Now, another thing I'm looking at, and I know that Blake covered it, is the fact that, you know, Aussie is breaking below this ascending trend line support. Obviously, you know, we've said plenty of times that that Aussie is like bearish. There's no question about it. As long as we stay below 75 cents, I've been saying that for weeks and weeks. As long as it's trading below 75 cents, sorry. I think, you know, there is no argument to be made to be long. Obviously, as I also said, you know, it wouldn't be easy to sell, you know, in such a mature, you know, bearish trend, because you know, you would expect eventually, you know, a stronger rebound to the upside. But you know, for the time being, you know, we have to respect what's happening here, and I think that another thrust towards the target I was looking since we actually broke below this triangle, which is at 71 cents. Why? Because that's the 161.8% extension of this rebound higher, the one I just marked, right? So 161.
We lost you again, Steve. I think you're going to have to restart your computer. So just wait for you to get back online, and then I think I'll take over for a minute or two until you do. Okay, so I'm going to do that. Let me take over the screen, change presenter, while Steve reboots his puny computer. No, I'm just kidding. His computer is like the best computer I've ever seen in my life. Okay. So while Steve reboots, I can go over a couple of things. We looked at the DXY with Blake earlier. This monthly candle looks very bad. This is the lines I've drawn, and I've talked about this in the webinar for some time. I still think this is the path the dollar is going to take. Will it be dollar weakness? Will it be euro strength? Maybe a combination of the two. That's what I think is going to happen into year end. Now the interesting thing is I want to have a look at oil, which is also affected by the dollar, obviously. But okay, so here's the weekly chart of WTI. Again, this is what I thought was going to happen. You know, I've been quite neutral on oil for the past few months, and you know, given that it's trading, I personally think supply and demand are kind of balanced. I've said this before. There's always a risk of some kind of a black swan event, and black swan events are usually, well, always actually to the upside. So there's always a geopolitical risk that something happens in the world and oil spikes. Until that happens, or you know, unless that happens, I think oil will be relatively trapped within these two ranges, you know, $60 to $77, whatever that is. I thought it might have gone a little bit further down and then bounce, but it seems to be wanting to go straight up towards 75. And Steve was talking about the kroner, and we've talked about the Canadian dollar as well, which are obviously influenced by oil as well. So we really need to see the Norwegian kroner and the Canadian dollar strengthen as oil goes up. You know, if it doesn't, that's going to be a bad sign. So you know, I'm keeping an eye on all those together. Okay, so now the other thing is clearly sterling. We had Barnier, the chief EU negotiator, repeating today that they're prepared to make an unprecedented, how did he say it, unprecedented agreement or whatever, you know what I mean, with the UK, and that was that's bullish a pound, obviously, although it hasn't really moved much on the back of those comments. But you know, I still think that everything that's coming out of these people's mouths is starting to look positive. It's not all going to be positive, that's for sure, because we're still negotiating, but I do think this is going to happen. We have to remember also the euro is under pressure a little bit because of the emerging markets wobbling at the moment. Like Turkey is not doing well, the lira is weakening again, and it's a well-known fact that European banks have the biggest exposure on the lira. So if something happens with Turkey, anything with their debt, the European banks are going to be the ones worse off than you know, American banks or whatever. So you know, that's something that's weighing on the euro. And another reason why I think that euro sterling should continue lower, at least towards that 84 area there. Then it's going to have to make a decision, but I really do think it should go there. I'm shorted euro sterling a few days ago, and I'm definitely keeping that for now. Let's see. Do we have any questions to have a look at something?
Hey, Stel.
Hey, you're back. Just in time, actually. Okay.
Okay, pass it back. It should be fine now.
Yeah, hold on.
It's some kind of a Windows problem. You know, I have my computer open all day long, like 24/7. So probably should start restarting, you know.
Just before the webinar, maybe,
more frequently, like once per day, because I'm doing it actually once every 4 or 5 days, and as it seems something is off, but I don't have the time to actually like format it. Anyhow, so as I was saying, Aussie seems to be targeting the 71 cents, the 161.8% extension. of this move higher. So I think, a move towards there, and this is a line that we drew some time ago. So I was saying, as long as this triangle is holding as resistance and, Aussie remains bearish, a push towards there looks very likely. So this is something I consider like a high probability thing. Same thing as the Kiwi. If you remember, I had like a triple confluence of supports at 65 cents in the Kiwi. I think now that Kiwi got rejected from the previous triangle support after testing it as resistance, and also from this descending trend line, I think that, a push.
Okay, Steve, you need to check your computer. I don't know what's happening, but we're losing you again, unfortunately. So,
towards 60.
Yeah, we lost you again, Steve. I don't know what's happening. Okay, I think I'm probably going to take over again and go from there, and then you have the whole weekend to figure out what's wrong. So
5 cents in the queue.
Yeah, you keep breaking up, Steve. I'm going to take the screen. So change presenter, show my screen. Sorry about that, guys. I don't know what's happening with Steve's machine, but I'm going to continue. So we have, I just noticed we have a question from KH Stalin, interesting name. My weekly view on Euro Aussie. Okay, here it is. Looking at the fundamentals for both currencies, the Euro and the Aussie. The Euro, we've talked about it, the risks associated. Barring a major global recession or global crisis or whatever, will the ECB hike, once in 2019 and then at a flat pace? Probably not. Steve has said this as well. If nothing major happens in the world, then the ECB will probably have to hike a little bit faster. Now, inflation is already at 2%. Okay, it ticked down from 2.1 to 2 today, but still it's at target. And the potential problems within the Eurozone, they seem to have gone away for now. So, there's no reason why the ECB couldn't hike a little bit more than expected. On the other hand, there's always the risk of black swan events, like we said before. The Aussie, on the other hand, has been doing better. Commodities found the bottom last year. Now they're not flying, but they're recovering a little bit. The Australia has a big dependence on China. So as long as China is not experiencing a hard landing or in any serious trouble, the Aussie should be doing okay. So based on fundamentals, I don't have a clear view on this. I'm relatively neutral. But having said that, you can see on this chart that we are getting towards this zone here, which is pretty important. 1, 2, 3 times, fourth time. So if you put a gun to my head here, I would definitely buy that. Sell that. Sorry about that. I would definitely sell that. I don't have a position yet, but I am bearish for the euro in the medium term. It's just I'm Greek. I live in Greece. I can see the problems associated with joining so many diverse countries with the same currency. We know different productivity, different mentality, different everything. So I have a fear about the whole European project, how it's going to end up. So if you put a gun to my head, I'll sell this. But at the moment, I'm actually quite neutral in terms of fundamentals. Let's have a look at another one. Argentina and Brazil. Yeah, good question. Emerging markets seem to be in trouble, and it's all when the dollar strengthens, it's always a case of emerging markets suffering, right? It's always been like that. So, and this is one of the reasons why I think the dollar will not strengthen in the medium term. It will probably create huge, shockwaves. And in terms of what's actually happening in Argentina and Brazil, I'm not. I was never an expert in Argentinian, Brazilian, politics and their policies and fiscal policies and all that. So I really can't comment, I'm afraid, because I don't think I've ever traded Argentina and Brazil. So it's just something I've never been into.
Hey, Stelios, just want to let you know I'm here to support. Okay. So is Steve having some issues, huh?
Yeah, I don't know what's happening with this PC. We had these problems. We thought we solved them, but clearly they're back again.
Yeah. Okay.
So I mean, I can have a look at Aussie yen, which our friend AA is asking. I hope it's not Alcoholics Anonymous. Aussie yen. Let's have a look. What have I got in this?
By the way, the Aussie looks bearish pretty much across the board. It doesn't matter what you're looking at, really.
Yeah. Well, I said at the beginning of the year that I thought that the yen was probably going to do well this year, and I stand by that. You know, it's not just the economy which is starting to, you know, to show some signs of life after 20 odd years of stagnation, but it's also, you know, we've seen the governor trying to talk down the yen for ages, and it's just not happening. I personally think that the yen is actually one of the places where, you know, when things start going wrong, I think that's one of the places where money could well, you know, flow to. Now we've asked ourselves this question, you know, when things go wrong, where does the money go? Do they go into dollars? That was usually the case historically, but with things as they stand at the moment, you know, what do? Do you go to euros? Do you go to sterling, which still has this big uncertainty with Brexit? You know, the yen seems to me like a good choice, actually. So, you know, Aussie yen, I probably have a slight bearish bias. Anyway, what else do we have?
You know, the dollar continues to be pretty strong going into North American trade here, and so we're seeing the euro dollar drop to that 116.30 level, which is, in my opinion, pretty key support. This is support that we really need to start holding, because this was a breakout point from a few days ago. So pretty key support that we're coming into.
Okay.
And the dollar Canadian is making its way up towards that 131 level. We are at the 618 retracement here at 130.66, which could slow down the ascent in the dollar Canadian. And you know, we're getting real close to that. We're getting close to what I would consider as resistance. You know, have you talked about the Euro New Zealand yet?
No, I haven't.
You know, the Euro New Zealand, a lot like the Euro Aussie, which is here. Let me go ahead and I'll grab this from you really quick. Give you a little bit of a break. Looks like I came in as Dale again. Huh. All right. Well, I'll come in as Dale. Okay. So the Euro Aussie, I know you were just discussing it. We just hit the 161% extension, but excuse my dogs. We're challenging some really big resistance here, trendline resistance. This is what happens at 5 in the morning when the dogs think they see something, and so we have this huge yard, and they think they see a bird, cat, caterpillar, who knows what the hell they're saying, and then they run at the top speed, flying across the yard. They'll never catch anything, and then they come back like 5 minutes later, and then they're like, okay, I went back in. So that just happens. Anyway, so here's the Euro Aussie, and we just pierced the 161% extension, but my fear is with the Euro Aussies, we're really going to start screaming higher here. We're going to scream up towards this 164, 166 level here in the coming sessions. And if you sprinkle on a little bit of risk aversion, which you can see the markets are a little bit risk averse, the NAFTA deal not getting done with Canada, more possible trade tariffs with China, it's just weighing on the Aussie dollar. So this Euro Aussie looks extremely bullish. The Euro New Zealand we were just talking about, I've been buying this a lot over the last 24 hours. I keep buying the dips and selling the rips, and buying the dips and selling the rips. Anyway, the Euro New Zealand has this big cup and handle pattern, and Dave from our chat room, he identified it. And once it broke out 175, you have to stay bullish now that it's above 175. But as you can see, it can extend itself up to 176. 50, 76.60 on this current rally. It looks very bullish. I always love cup and handle patterns because of the basing, but but you know, when a currency pair bases like this, it gives it that nice, you know, accelerated move higher, and that's what we're currently seeing right now. Yeah, it's come off for the last couple hours, but I think overall we're still going to be moving higher here. And probably one of the last things that we should discuss before we end it for the week, Stelios, is the dollar index. The dollar index is pushing right up against this this neckline and previous underside of this trend line. The dollar should fail right around here, as it's failed multiple times, once, twice, three, four. This could be the fourth time. You know, even if we push up another 10 cents in the dollar index, right around here is going to be, should be a failure point for the dollar. So I'm hoping it is, because I'm long some cable and I'm long a little bit of euro. So we'll see if that, let's see if that comes to fruition after the New York cut. One of the things that and I talked a little bit about this earlier, Stelios, is the market was prepared for dollar weakness today. Everything that I read from every bank suggested that there was going to be dollar selling at month end. So I think what happened today is you had the market, you know, reading all these different bank reports. I'm not just saying, you know, as one bank saying it. I'm saying that there was several banks that were saying, you know, we're going to see dollar weakness coming into today, and I think the market probably got a little aggressive short the dollar, and they're just getting that trade thrown up in their face before the New York cut. So, you know, in the next couple hours, I would assume that the dollar probably rolls back over again. So that would be my assumption here. And anything else that we should talk about before we end the webinar for the week?
No, I think no, I think we're fine. Let's see if we have any other questions.
I actually wanted to show some Aussie yen and Kiwi yen, but
oh, it seems... you fed the gerbil.
No, he's going to cut out in like 10 seconds, I'm sure.
Yeah, but it's likely that, you know, I have to format my computer, as it seems. I can't avoid that.
I thought you didn't feed the gerbils that were spinning around in the globe to power your internet connection.
No, it's not unfortunately, it's not my internet connection. That would be easy to fix, unfortunately.
Well, there's some fun things to do for you on the weekend.
Right. Did you want to try to show the charts really quick before we go?
I can make one final attempt, although I haven't changed anything. So I mean, I restarted my computer, but it didn't seem to make a difference. So yeah, I can make an attempt. And
you sound good right now. You sound perfect right now. So
yeah, I hope so. But now that I got the screen, I don't know. I don't know if that will remain to be the case.
Okay. Well, I'm gonna bow out again. You guys have a great weekend, and Steve, hopefully this works.
Okay, Stelio, tell me immediately if you lose me, and just.
If I lose you, I'm just going to say goodbye to everybody. And
yes, exactly. That's what you should do. The funny part is I can hear you perfectly fine when that happens. But okay, so you know, I wanted to show the nice rejection that we had, you know, in the Aussie yen. We were talking about this horizontal support area that, you know, can act as resistance. So the Aussie yen seems to be getting rejected from that area, which is, you know, quite nice. And you know, the Kiwi yen also rolled over before we actually reached this descending channel's resistance, and you know, from the 50 DMA, and just before actually testing the 61.8. So you know, that's also a nice rejection. Just look at yesterday's candle; it's massive. I mean, it's a huge outside black candle. In essence, it engulfed like 4 days of price action, right? And you know, the other two things I wanted to show was euro yen and pound yen, simply because we were talking about, you know, the potential for euro yen to turn lower as long as we remain like above this 131.60 area. You know, quite a nice reaction from here. I would like to see now what kind of reaction we're going to get from 128.50, because I have to admit that, you know, the move higher was, you know, very strong, but you know, that tweezer top that we had yesterday, in combination with the follows through we see today, you know, they don't look that bad, considering the fact that you know, we have been respecting like major levels. And you know, same deal with the pound yen. I was showing this parallel trend line to you know, this major formation that we actually penetrated to the downside, you know, some time ago, and the 61.8. We tagged the 61.8 of the last move lower, like to the pip. and we moved lower from there. Initially, I was looking for a rejection from the 144.50 area, but we actually sliced through that. We now seem to be reversing, and perhaps this was this was just a one-day thing. We need to give it a little bit more time, but as I said, I think we need to respect the potential for more downside, both in the pound yen and the euro yen. Of course, the last moves higher, would make me a little bit more skeptical. I would want to see, a little bit more of a price action, but it is what it is. And one more thing having to do with the SPX. Of course, it remains extremely bullish. There's no question about it. I was monitoring this channel. We actually broke through the channel, held there for one day. We now slipped back in the channel. So, is this potentially like a false breakout in the short term? Perhaps, because we are definitely in overbought conditions. I was showing several days ago how overbought we are now, both on the weekly and the daily levels. And keep in mind that Nasdaq got rejected just before it actually tested this ascending wedge, and the IWM is still a little bit lower than this like triple major confluence resistances. So my thesis remains, we have to respect the potential for more upside, but I do think that we shouldn't have much more to go before we see like bigger pullbacks. Now, I'm not talking about trend reversals, because you need a lot more evidence to even consider something like that. But at the very least, some bigger pullbacks, I think, are in the cards. That's. Do we have some specific questions, Stelio, that we haven't covered? Some kind of a pair or instrument?
Nasdaq and S&P, and I think we can call it a day with that.
Yeah, we just covered those. So anything else?
Oh, sorry. Yes, sorry.
By the way,
absolutely. Yeah.
One more thing. I do like USD CAD. I know that Blake talked about it. If you remember, I kept liking USD CAD with the upside as long as we remained above 128.50. Nice triple confluence of supports was there in 128.50. I talked about this while I was in Porto Heli as well. I'm now monitoring this 50 DMA, which coincides with this descending channel's resistance. So a breakout from there, I think increases quite a lot the likelihood for seeing higher prices. And now having to do with the USD MXN, this is exactly what we drew a long time ago. I think there is one more leg missing to the upside. So this is still my view. I know that we're currently about to test like some major resistance area here at 1925, but I do think that we should break above it. And I do think that we're actually going to push higher towards perhaps the next target, which, given how close the 38.2 is, I'm guessing, and it coincides with the previous high, I would guess that we would need to see higher prices. So perhaps the 50% fib at 1968, or even the 61.8% fib of the last move lower, which also coincides with this major horizontal support resistance area, which is almost at 20. So I do see the likelihood of one more push to the upside in the USD MXN before we can actually resume to the downside. And just to say, I know a lot of people are monitoring lately due to the crazy volatility. I drew several days ago the possible scenario of a triangle, because I do believe that the market might require more time to consolidate the recent gains in this pair in the USD TRY, mostly actually to consolidate after immense losses. I mean, after this huge dump in the Turkish lira. Of course, it's a currency that's under severe pressure, and for good reasons. So I can't exclude one of the possibilities being like directly, pressing higher towards new highs. I don't know if you mentioned it earlier, Stelio, but we already started having obvious effects from this. I mean, the major Turkish telecom company actually went bankrupt because they couldn't repay like a $5 billion bond, right?
I didn't actually mention that, but yeah, you can
so and we know that theoretically speaking, above 7.2. I think Goldman Sachs thinks 7.2. Banks are going to start failing. So, we are getting very close to the point that perhaps, Turkish lira depreciation can become, a way of no return, at least for a given period of time. But if that doesn't happen immediately, I think that the chances of creating some kind of a triangle, like a longer term consolidation, like it might take a few more weeks before moving higher, or even another attempt to push lower through intervention or whatever before we see another to push to the upside. All of those are likely scenarios. But as you see, the common factor between them is that I don't think that the Turkish lira's depreciation is over yet. So it's a matter now of if it's going to take place immediately. The resumption lower for the Turkish lira, or we're going to need a little bit more time to to see lower prices for the Turkish lira. But I do think that it's not going to be easily avoided. One more thing. I do think that this kind of consolidation that we see here in gold doesn't seem bearish. So I do think that this consolidation that we're seeing here is likely to be resolved after at least one more push to the upside. So I think in the short term, remaining like bullish precious metals seems to be the right thing to do. Obviously, silver doesn't look that good. I kept saying like since several days ago that if you want to be long something, between the two of them, you should clearly choose to be long gold. Silver doesn't look healthy at all. I do think that silver might even produce like one more push to the downside, perhaps give us a divergence that you often want to see between very highly correlated items in turns. For example, seeing silver posting new low, but gold not following to that. Usually divergences like that do matter, and they often do indicate general turns in the market. So that's something I'm paying attention to, because to be honest, silver does look like it might push to new lows. But as I said, I think that gold is more likely to appreciate further from here in the short term than anything else. One more thing, I was talking about palladium since many days ago. I was saying that it looks better than any other of the metals. My only problem with buying palladium is that there was no reward to risk ratio to do so. It's currently now backtesting this broken trend line, this time as resistance. This was actually the trend line support that was holding this uptrend since the beginning of 2016. So I'm really interested to see what palladium is going to do from here, if it's going to pull back, and if it pulls back, what kind of a pullback are we going to get? Because this general formation for palladium does look corrective. If you see the big picture, you can see what I'm talking about, right? 1,000, very critical level. It's not only because obviously it's a psychological level, it's a very round level, but as you see, the 200 daily moving average is just barely below that. 1,000 has also been a horizontal level of support resistance. I think that palladium is getting close to very critical levels. What happens, what transpires from here, is going to tell me what I want to be doing with it, from this point on. Finishing up the metals with copper, I was talking about this support resistance area. Seems to have rejected copper, quite nicely. As long as we stay below this area, there is no question about it. There is even the possibility to see lower prices in copper, and given the high, the high correlation with Aussie, not much of a surprise there, right? We saw, if you see, the price action is more or less lately equivalent. We saw a rebound, a rejection from for both of them from expected resistance areas. Aussie looks like it wants to post new lows. Copper might do the exact same thing. So thank you very much. See you again on Tuesday. And as we said, Tuesday there's an extra webinar prior to FACE, with Paul. I hope you're all going to check it out. It's definitely worth it. Thank you very much, Dale and Blake. And have a lovely weekend.
Enjoy your weekend, man.
You too, mate.
Thank you, everybody.